Okay, hello traders, this is the Wolf with another tutorial in the trend series, and thanks for waiting for my video. Finally have some time to make another tutorial video in the trend series, and in this video we're going to talk about trend surfing like I promised you in the last tutorial video. But before we talk about trend surfing, I need to talk about how the Bollinger Bands plays an important role in trend surfing as well as the EMAs. So before that, let's go to the tutorial session. But before that, let me do the risk warning. Your invested capital may be at risk. Do not trade with money you cannot afford to lose, and this video is not an investment advice. So today we're on the Thursday live market, and okay, basically what does it mean to surf a trend, or like I call it, ski a trend? Okay, so you like to use the word surf the trend for an uptrend and ski the trend for a downtrend. So first of all, you would need to understand, okay, many traders, many newbie traders always get out of the money because of two reasons mainly. Firstly is when they go against the trend and pressure, and secondly when they try to trade the retest candle blindly. So this tutorial I'm going to explain a bit more about how to identify a breakout wave, and how to surf the wave, and what are the things that we need to look out for. Okay, so this video I'm going to make it a bit longer than the previous videos because I want to explain whatever I can in this video, and also since it's been a while since I made a video and I don't know when is the next time I'm going to get some time to make another video, so I'm going to give you guys whatever I can from my experience and knowledge in this video, and hopefully it will be definitely a mind-blowing video, and to help you guys understand a bit more about trend. Okay, so currently we're on the GBP CAD, and you can see currently there is a breakout wave of the downtrend. So what are the things you need to look for when you're following the trend? Okay, I've already covered the support and resistance series. So the most important thing is you need to know how to plot proper support and resistance. Secondly, and key levels, major minor key levels. Secondly, you also need to know how to understand pressure from the way the live candle shows you. Okay, and I'm going to show you behavior. Okay, behavior of the market around the Bollinger Band, and also market behavior, what to expect and what not to expect when the market is around the BB and also EMAs and everything. Okay, so you need to understand, okay, the market condition and what's happening in the market. You need to understand the bigger picture. Okay, so you can see currently, okay, or previously, the market was in a major uptrend because the EMAs are aligned in a major uptrend way, 20 below, 20 above the 50, above the 100, above the 200, and the Bollinger Bands have been in a very tight squeeze range, and then you see this is the first breakout wave that happened. And let me zoom in so I can explain to you. Okay, so let me clear this. So you can see this was a major key level based on the round number, and you can see the behavior, trying to break, couldn't break, trying to break, couldn't break, 200 EMA supporting, are not allowing the buyers to break, but you can see that the market is not able to go higher, and the EMAs are starting to shift from a major up to a major down. Okay, and you need to understand that the shift doesn't happen immediately. So you like what I have always explained, never ever use indicators blindly without understanding the market. The indicators are there just to show you what the market is trying to do or what is happening. You need to understand this. So you cannot just base trades on it blindly. Okay, so you can see you have a breakout wave. The trend was strong enough to keep the market below the BB2, and then from here the market reversed back into a pullback wave from this round number. Okay, and then it pulled back till here, which is another very strong round number, the 6,000. Okay, let me try to plot the level. It's not so easy. Let me just try to get the level. Okay, let me just try to zoom in a bit more so I can get the level properly. Okay, so this is the level. Okay, and what you need to understand is it's always better to go with the direction of the market. So you see, there was a breakout wave and then a pullback wave. Over here, consolidation, and then another breakout wave here. So you see, this candle broke the BB2. This candle pulled back to this level, or you can also call it the last kiss, and then breakout, continuation, pullback, but the buyers are weak, lower, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. And then you need to understand the difference between an exhaustion candle and a power candle. Okay, so in a breakout scenario, you cannot, if you are in a downtrend, you cannot do call trades blindly or higher options blindly. You need a proper confirmation and a reversal pattern or reversal signal with confirmation to show you that the market is going to reverse. Okay, and what do I mean by this? When you see this candle, which is like an exhaustion, okay, you see this is the BB2, this is the breakout, pullback, breakout, continuation, and you can see that the market is not strong enough to keep the market below the BB2, so you have to be careful of this. And then you have a trigger from this round number. Okay, let me try to get the round number. Based on current price action respect. For all those who are following my videos, by now you should know that this term, current price action respect, has been always what I use again and again and again, and you always hear me using this word, current price action respect, current price action respect, current price action respect, or in short, CPAR. Okay, let me try to get the level, because when you plot SNRs, you need to plot it perfectly. Okay, you cannot just, even if it's a 0.01, okay, you cannot say that, oh, okay, it's just 0.1 and I plot it like this. You need to plot it perfectly, then you can understand the market better. Okay, SNRs, like I told you before, is a very crucial element in understanding price action. Okay, and you can see the market now is in ranging mode, or we're having a pullback wave. from this breakout. Okay, it's irritating me. Okay, just give me a second. When you have more than 4 to 5 digits, it's not easy to get the exact price. Okay, got it. So for those who are wondering, I always use purple line for round numbers with at least 2 zeros, yellow for numbers with 1 0. Okay, this is also a purple level. This graph has a lot of double zeros, so just adjust this. Okay, this is 70. This is okay. Okay, this is also a purple level. Okay, you can see how the price behaves to break this level, retest confirmation, and goes down. Okay, so now you're in a downtrend. Market is in ranging, and now you have a uptrend wave. Maribozu set up on the 20 EMA, but we do not want to go against the direction of the market, which is currently up at the moment. Okay, so you need to understand this. Whenever you do a trade, you need a confirmation. Now this is a clear uptrend wave, if you're going to do any put trades, you need confirmation. You cannot just blindly take a put trade using SNR without waiting for a confirmation. And you can see this is nothing more than just a retrace. Okay, so this is the neckline. And I always use orange for my neckline levels, and you can cover the whole week until here if you want to. Okay, and you can see the market is clearly going up, but we are in a ranging market. So following this wave, this is called the surf. But whenever you surf or ski a wave, you need to always be careful of the danger zones. So in an uptrend, the danger zones is always resistance. In the downtrend, the danger zone is always support. So I hope I can show you some trades as I'm explaining this concept to you on how you can take some good sure shot trades with the trend, with the pressure in your favor, and with SNR and everything in your favor to do a high probability trade or high probability trading setup. So this is the lowest point, which I like to use red for. So you can see this is a ranging. Okay, when you see the market is in range, you need to always be careful of fake breakouts. Okay, you can see this level was the key level, but this is a fake breakout. Okay, this is a fake breakout. When it clears, you need retest confirmation before you continue surfing the trend. And sometimes retrace happens in one candle, sometimes it happens in 2 candles, sometimes even 3 candles. So you need to be able, in order for you to do a proper good trade following the trend, you need to be able to mark your SNR levels properly, understand the pressure direction of the market, and then you do trades following the direction of the market. Okay, and this topic on surfing, it's impossible for me to cover in one subject, so I'll just this tutorial will be more on introduction and for you to understand better about trend surfing and trend skiing, and I'll go into further details in the next tutorial video, and I hope you understand a bit about what I'm talking about, because This subject is a subject which is not so easy to explain, but I'm trying my best to explain it to you in the most easiest, most comprehensible way that even a 6-year-old can understand. So I'll just let a few more candles run, okay? And always remember, just by watching my video alone, just once, it's not going to be enough. And I've made my videos in such a way that every time you visit it again, depending on your trading level, you will definitely learn new things. So don't think that you know SNR, the SNR series, or you've been through it, you know what it is, you know exactly what it is, you don't need to watch the video anymore. But go to the market, try it out, improve your skill, learn what you need to learn, and then you come back and revisit the video, and then you see if you can understand anything more. And I can assure you that every time you watch the video, you will learn something new. So with this, I will end the tutorial video. But like I said, you need to understand how the trend behaves. So now we're having a ranging market. Okay, ranging market. A ranging market always goes. It can have retraces, but the target of the ranging market is to go from the BB2 up to the upper BB2, and vice versa. And depending on ranging market or trending market, you have to be aware of certain things. So like now you see, the most important thing most newbies need to avoid, okay, because from my experience, newbie traders, and they just love to go against the trend, and they always have this mentality of what goes up must come down, which is how the brain normally works. So you need to get rid of this mentality first, okay? And the best way to do it is to always stick with the direction, and you try your best to practice continuation trades rather than reversal trades. Because the moment once you understand continuation well, reversal trades will be easier for you because you will know how to take them with proper confirmation. Okay? So with that, I'd like to end this tutorial video, and I'll see you in the next tutorial video. We'll talk more about trend surfing. And next video, I will separate this tutorial on trend surfing into maybe 2 or 3 parts, which I can try to give you all my knowledge and experience in the market. And the next topic probably I'll be talking about, we'll cover ranging market first or trending market first, depending on whichever I see suitable. But I will definitely break it down in a way that you guys will be able to understand exactly what I'm talking about. Okay, with that, I'd like to end this tutorial. This is the Wolf signing out. Take care, stay safe, and bye-bye.